So we're going to discuss the concept of compounding returns with different banks, essentially being able to make sure you maximize going into a new banking relationship with the best positioning, or if you have an existing banking relationship like an American Express and you're looking to get maybe credit limit increases or maybe graduate from personal to business credit cards and getting the best limits, we're going to talk about at least one strategy that has worked really well for me to help me go into new relationships or expand existing relationships, getting better results than I would have had I not employed this strategy. And that's in reference to getting the best credit limits, rates and terms on different lending products, especially credit cards in this particular instance. That concept is going to be leveraging the fact that banks love to see you have good relationships with other competitors. Many times it's referred to as comparable credit. When banks are pulling your profile up, if you're brand new to them, or if you have an existing relationship but you're trying to expand into a different department or region with them, they're going to be looking to see how you're managing other relationships with equivalent level or respectable level institutions. Very important. So when you put this in context, that basically means you have the ability to either hurt or support your argument to get the best rates, terms, and limits on credit cards when you're dealing with these institutions, applying for new credit with these institutions. One of the most strategic plans or strategies I put into place that has worked really well for me has been leveraging smaller or more lenient financial institutions, let's say credit unions. In particular for me, I've leveraged Navy Federal to graduate my relationship with many institutions, but especially American Express being one primary institution. How did I accomplish that? When it comes to underwriting institution like a Navy Federal, you are able to get access to better rates, terms, and limits with them with less financial prowess. Basically meaning that I don't have to have the same level of income with Navy Federal that I might have to have with American Express to get a high limit. Same thing with the credit score, same thing with the credit profile. So I start out with a Navy Federal, and if I'm looking to get a $20,000, $25,000, $30,000 limit with an AMEX, then I'm going to start by getting that limit with Navy Federal. So that has been a strategy I've employed. How did I go about that? I'm going to still initiate my relationship with American Express, which in my case, I did. So I'm not telling you not to plant the seeds or get started with American Express. You want to start with the larger institution or the more stringent institution because, again, relationship banking does work. You want to have familiarity within that institution when you go for credit later on. But you're going to put the bulk of your focus in the smaller, more lenient institution. So for me, some of my better direct deposits, some of my better balances, the pledge loan strategy, these different things are things that I really focused in and employed with Navy Federal while I was bird feeding American Express. You can't spread yourself too thin when employing this strategy. Very important. So continue to pay attention. You have to make sure that you're not spreading yourself too thin where you're starting a relationship with American Express or planting the seeds for it, but then you're kind of spread out with Navy Federal, this bank, that bank, and you're not able to show good, healthy financial habits because you're so spread out with your funds. You're so spread out with your spending and your credit activity. You have to concentrate for this to work. So with Navy Federal, I had several other relationships with other banks, but I pretty much paused my efforts if I could. You know, if I had a couple different direct deposits spread out over a couple different institutions, I might concentrate and consolidate that with Navy Federal over a period of time, right? So it might be a 90-day or 6-month period of time, 90 to 180 days, giving the larger institution I'm looking to really employ down the line a look back at my success with another institution. This strategy works extremely well because they're looking at it to say these institutions are relatively as credible as we are. They're following similar guidelines, restrictions, laws, regulations, etc. They're fishing in the same pond that we are for clientele. So American Express and Navy Federal are significantly different institutions. But at the end of the day, their clientele base, the business model that they're functioning under is very similar. So if you're good with them, you're pretty good with us, or at least we're willing to take the chance. What I did was establish a relationship with American Express. The American Express branded Navy Federal credit card is the one I started with. That's the one I started with a $3,000 limit. It might have been like 2019, 2020. And I graduated that card to the flagship card. And that card currently at the time of this recording is sitting at a $22,000 or $23,000 limit, graduated over time progressively. And that is the type of relationship I went into. And now at that point, I had auto loans with Navy Federal, multiple pledge loans. I've had an extensive banking relationship with Navy Federal. I have their flagship checking account. So by the time I graduated over to American Express, whatever data they're able to pull that I know about and don't know about, banking relationship wise, and especially on my credit profile, they were able to see that not only did I have an okay relationship with Capital One, I had a decent relationship with this bank or that bank, I had a really solid relationship with Navy Federal. And compare available credit limits allowed American Express on the onset to start me off more at around $9,000 or $10,000 for a start, and gave me a very solid credit limit increase within 90 days after the fact, up to $20,000 on my first call with them. I bring this up to say you want to establish a portfolio of banks that you have strong banking relationships with, and you have to be very strategic about when you apply for these different institutions, when you start the banking relationships. Because if you do it properly, if you do it effectively, you can get the institutions that have the most growth potential strategically set up to have a better start with them by using the smaller, more lenient institutions to get in with them. Hopefully that made sense. Essentially, you want to leverage building out a very strong banking relationship with your smaller, more lenient institutions. Navy Federal is a good example. Many credit unions will work to get into your American Expresses, Chase Banks, Bank of America, PNCs, Citibank. These are the types of institutions that are going to typically want to see you prove yourself before they're willing to give you a significant start. Doesn't mean you needed to get in with them at all, but almost certainly you're going to start at a very small scale, and it'll take longer for you to work up. If you get a good banking relationship and credit relationship with other institutions that are easier to get it with, and employ that over with these other institutions, that's when you can start coming in the door with $10,000, $15,000, and $20,000 limits plus. You can start getting incentives and offers from these companies where they're coming to you. Much better relationship than going to them looking for capital with no track record to back up why they should trust you with it. So I wanted to put that on your mind. It's something not only professionally I've experienced with clients as a small business banker and as a consumer banker, but also my personal and business relationship growth from personal experience. This works like a charm, and it is a very simple strategy to employ. Make sure that you're paying attention, taking notes on this if you're not already using this strategy. If you are, I want you to comment down below and let me know what banks and institutions you've employed this strategy with, how it worked out for you with the larger institutions. I want you to comment down below. To all my pioneers, welcome back. To my new viewers, welcome in. I want you guys to stay focused, stay in motion. I'll see y'all soon.